Hello, everyone. My name is Marcello Kolax, and I am the managing director at Clever Markets. You are watching the weekly Outlook video for European energy markets, this time for the week starting 2nd of October, which is also my birthday. Okay. Usually I walk through the TTF, Brent, and carbon markets, but today I just want to focus on one concept and explain why you or your colleagues might be losing money in the markets right now. And that usually is just a misunderstanding or a mismatch of time frames. So, what we have in front of us here is the TTF front month product. So, the TTF is the title transfer facility that is Europe's key reference hub for gas markets. But you can use this is just a placeholder for any other market that you might be interested in. So, imagine you are a trader and you hear from your trading manager and your colleagues that we are bearish and the markets should be going lower. And then they do cite factors like sufficient LNG supply, which is true, full storage sites, which is true. Europe has shown that they are willing to destroy demand in winter if they have to. And of course, weather is a little bit mild right now, so it's not looking too bad. And with all these factors, traders are still wondering why the market is going up, or at least why it is not continuing to go down. And consulting just any chart, we would see very quickly that, yeah, the market actually has stopped going down. And in fact, we are not making any new lows. However, we are also not making any new highs. So obviously, the market is, from a midterm perspective, in a sideways trend. What do I mean by midterm? The midterm is defined by the Clever Markets methodology as a period between like one of up to like 3 months. And we can see, yes, so there's a weekly chart, 1 week per bar here, per candle. And yeah, we are in a sideways trend. But we still have traders trying to look for shorting opportunities, which of course is probably disastrous or can be. And the evidence is a little bit contradicting if you don't really know what you're looking at, because overall, yeah, the market is going lower, but the definition of a downtrend is lower lows and lower highs. So the past few swings, have we made lower lows? No, we haven't. Or have we made higher highs? No. So we are neither in an uptrend nor in a downtrend. Then let's draw in a trend line just to see where we are. By the way, I'm looking at this from log chart in order to so that you can switch on your chart. You can switch between log and arithmetic charting. If I would use the standard arithmetic charting, the chart would look very much distorted, so you can't really draw in any trend lines. So for a long-term trend, and when you zoom out of the market and you have like years in front of you, then I recommend looking at the log chart. And here you can draw in on the log chart a nice trend line. We did break above the trend line, which is not a bullish sign, but it's a sign that the bear trend has ended. In order to get a bullish sign, we would have to move above the rectangle. So if you are still so fixated on looking at LNG and storage sites and all of that, but the market is, in quotation marks, irrational and it shouldn't be like that, well, maybe it would help if we just look at what the market is actually doing, because that's usually helping me personally a lot. And that's how I have been doing things. Then Ichimoku clouds are extremely useful, but if not fully understood, that can cause some trouble as well. So just by in so there's a lot of things going on with the Ichimoku cloud chart, but I'm just focusing on one single thing here, and that is if we are below the Ichimoku cloud, then we are in a bear trend, and if we are above the Ichimoku cloud, then we are in a bull trend. So, looking at, and the thicker the cloud, the stronger the resistance. That's all you need to know for now. That's the only thing that matters. So you see, we are below the Ichimoku cloud, and the cloud is very, very thick. So we are in a downtrend. Why isn't the price moving lower? Here again, there's a mismatch of time frames. This here is the medium time frame of up to 3 months, whereas this is the long-term time frame. So you are trying to apply long-term factors, fundamental factors, to the medium or maybe even near-term market. And the Ichimoku cloud is representative of the long-term trend. So that still means that the market in the medium term can move sideways. Also, simply the fact that the upper edge of the Ichimoku cloud is flat shows that no new highs have been made for a long, long time. So I'll just remove this for clarity, and I'm moving on to the daily chart. So now we know, okay, so long-term bearish, yes, but mid-term neutral. And what we have here in front of us is, let me zoom in a little bit. Now we are on the daily chart, and the rectangle that you're seeing here is actually the mid-term rectangle, the yellow one that was previously marked. Then we'll zoom in onto the near term, and we see that it's actually, we have made higher highs and higher lows, although they're not very pretty, but in general, we are still swinging higher. So now looking for shorting opportunities because the market should be going lower would cause or would maybe more financial loss than it could cause gains. And here, once again, this has nothing to do with, but the markets are based on fundamentals. No, no, no. The markets are based on a shift in supply and demand. And we have two methods available to us to make sense of this. We can look at fundamental analysis by simply trying to identify these factors, storage fullness, weather, LNG arrivals. And then we build our own models and see where the price should be. Or we assess supply and demand simply by looking at price, which is the result of everyone's assessment of supply and demand. And here's the thing, even if you would have the perfect fundamental model, it wouldn't really matter if nobody else sees it, right? So you can have the perfect fundamental model, but if there's absolutely nobody else who is seeing the same result as you are, they're probably not trading in a way that you think it should be. So that's why I choose to use technical analysis, because it tells me what the market is actually doing, not what the market should be doing. And this has helped me personally very much to like stay profitable even in markets like this. Okay, so midterm neutral, near-term bullish. But how come that Clever Market says that we are still seeing maybe a minor correction in the next couple of sessions? Well, that's because we are now moving intraday into, well, 1 hour chart. I recommend that. 15-minute chart, also very good, because we might see a little bit of hesitation right now with potential to maybe move a little bit lower. But as long as we are overall still making higher highs and higher lows, we could reach the 50 euros per megawatt hour, which is the upper rectangle boundary on the weekly chart. And then above that, we would fully turn bullish for the for the midterm. But this is far off right now. I'm not making any prediction here. And then we have like secondary tools available to us to tell us where the market is going. So we do see that overall, the MACD, which is a good trend tool, is making higher highs and higher lows. So we're swinging higher. This is good. Now we have the market it's called hinging. So we are not moving, it's flattening out. We are definitely not making a higher high anymore right now. A little bit worrying, but also in line with, we haven't broken above 44.8 for some time. So this is truly worrying a little bit. So there's a danger of us moving sideways for a little bit. So, but if we move above 44.8, then any doubts of a sideways move would be removed. And then there's little in the way of actually moving towards 50. I also find here there's the 20 exponential moving average, which is very useful in a trend, but less useful if the market is moving in a narrow band, which is almost the case here. But for now, we are maintaining above it. This old resistance level is now offering support. That makes sense. But ultimately, even if we correct lower, as long as we still make higher highs and higher lows within this channel, the idea is still near term bullish. Watch out for 44.8. Then we might be wondering, okay, but what is this here? Obviously, we are moving lower. Yes, that is true. So that is the stochastic, one of my favorite oscillator tools because they're a little bit more sensitive to market swings. And you can see we did get a bearish signal here, which is exactly what happened, yes. But this is more like a short-term signal. Zooming out a little bit, and we do see that actually we are still making higher highs and higher lows overall on this tool. So looking good. So this is why for the untrained eye, this seems very contradictory. So maybe on the intraday chart, we are maybe neutral, maybe a little bit bearish, whereas on the daily chart, we are in an uptrend, and on the weekly chart, we're in a neutral trend. So now people are wondering, so what do I do? How do I trade this? Because there's a difference between trading and analyzing, right? So I can analyze, we'll just give the direction, and trading is something very personal that no good technician in good conscience could give any trading advice to a broad audience. Definitely not. So this is why I simply say what I personally am looking at. So we always start zoomed out. So we look at the weekly chart, nothing much happening. So we are probably, I wouldn't be making any like medium term bets right now. Looking into the daily chart, there's a little bit of hesitation. The market is working through this maybe downside correction right now. So would I enter a long trade right now on the daily chart? Probably not. Would I enter a short trade? Also probably not, because we're trying to trade with the trend, because with the trend, the legs are longer and the corrective legs are shorter. So we want to have as much runway as possible. So right now we are working through a little bit of a sideways, maybe even a correction right now. So let's have a look at the 15-minute time frame. You see that we do have this broadening wedge forming, which is a notoriously difficult pattern to trade because the market is swinging like a broader and broader and broader range until it doesn't. So that is very tricky. So that's why for me, I say, okay, hands off the market for me within 41.15, or let's say the lower end of the broadening wedge, and the peak here at, what is this, 43 point something. This gap here wasn't really motivated by conviction. We simply had a rollover happening. So the monthly contract expired, and we are now looking 1 month ahead from Monday. So this year wasn't due to conviction, and usually it takes the market a couple of days to find a direction again. So right now I say hands off for me personally. Once we move maybe above it, then we would be making maybe higher highs and higher lows again. Good. Then would be looking for upside continuation also on the daily chart. A break below this, then maybe we would see a little bit of a more extensive correction. And can you see how we are looking for trading opportunities? We are zooming in weekly, daily, hourly, 15-minute. And the shorter we get, the tighter we get, the closer we get into the time frames, the more precise we can be. But for trading, we zoom out. So we start small and look for a good setup. So okay, above this level, there's more upside potential for the daily chart as well. Below this level, maybe the correction will continue. And then I would be looking at the daily chart again. So you can see, like if we move below the broadening wedge on the 15-minute chart, then maybe we get a little bit of more of an extensive correction, but that is okay. Corrections are healthy in an uptrend. They are needed. The market doesn't go up in a straight line. Correction is fine because the daily uptrend is defined by this channel. However, if we break above the broadening wedge, that would be good for the bulls. And then I would be looking for maybe 44.8. But this here is truly worrying me, the 44.8, because we hit it twice already. But if we move above it, then there's still a good solid play to be had until 50. Of course, with a tight stop placement, that would still make sense. That would still be reasonably profitable. So can you see how with long-term fundamentals are influencing some traders' midterm trading decisions, which has devastating consequences. So this is a surefire way to actually lose money in the markets when you misunderstand or when you mismatch um, the fundamentals that are impacting the time frame. Okay, I talked a lot. I hope that makes sense. I will give you maybe just one more example. This time I'll give you Brent. So Brent has been undisputedly bullish, so there's no doubt about Brent's uptrend. We are now opening the daily chart. So we are bullish in the medium and near term, but right now we are maybe working through a little bit of a correction here. So, and whenever you talk to a trader, an analyst, or a broker, or your colleagues, or your trading manager, always make sure what time frame you're talking, what you're referring to. Yeah. So let's say we are here in the middle. Let's say here we're at this point in time. Yeah. Let's say we're at this point in time, and then you say, "Oh yeah, the market is bullish near term," which is true because overall we have been swinging higher. But then your trading manager says, "Oh no, but we are bearish because we've been moving down for a full week." So here, once again, it is important to clarify what time frame you're referring to. And even just saying midterm or near term is irrelevant. You really have to go and say, okay, so on the daily chart for the next couple of days or weeks. Because when I talk to an LNG player and they say near term, then they mean 2 years. If I talk to let's say a trader at a utility and they say near term, then they mean a week. So even these terms are they can mean whatever you want it to be within your bubble. And if as soon as you start talking to someone outside your bubble, then near, mid, and long term might mean some very very different things. So always make sure that you're aligned with your outlooks and your time frames. So once again, at Brent, obviously near term uptrend, even medium term uptrend, but there's room for I believe it's going to be a very shallow correction. There's not much happening here. So let's have a look at the hourly chart. There you go. Okay, this is taking a second. And we do see on the hourly chart, but we are making at least a lower high. Not quite a lower low yet. So maybe sideways, which is true, which would be in line with a shallow correction. So can you see, and then let's zoom in even more, and we look into the 15-minute time frame. Then you would see that the swings are getting a little bit more granular. And you can see, okay, lower lows and lower highs here. A little bit of a sideways movement, which I agree with. Will be a shallow correction probably. And not much happening towards the end. Yeah, but we still see lower highs, not so much lower lows anymore. So if you talk to an intraday trader, they will say bearish. If you talk to someone who's more active on the daily chart, they will say bullish. And the devastating thing then is trying to apply, I don't know, midterm or near-term bullish factors and trying to explain using them for like an intraday market. Okay, so that is it. I hope you do enjoy this. This is nearly a 20-minute video now, but I hope this video will generate better trading results for you, which is my goal. I have made it my goal to make technical analysis education available to anyone in the European energy markets because the industry has changed permanently and I want to make sure that nobody is left behind. So give me a follow on LinkedIn. I am very active there. My name is Marcello Kolax. I'm just writing this out here for you. MARCELO. So this is my name. Find me on LinkedIn. I am very active. Um, do say hello and say where you know me from when you first encountered my name. If you have any questions, do let me know. Until then, happy trading and have a good week. Bye bye.